All right, let's dive into something we've all felt. You know that agonizing, incredibly frustrating moment in investing, when it feels like the market is personally out to get you. We've all been there. You set up your trades perfectly, you do all your homework, and yet, time after time, the market just moves in the exact opposite direction. Today in this explainer, we aren't just going to commiserate about it, we're going to look at a highly structured approach to surviving these brutal drawdowns without totally blowing up your portfolio.
When you see those multiple stop losses hit, just a sea of red X's across your chart, it perfectly captures that intense frustration of a losing streak, right? Honestly, it just validates that you are absolutely not alone in this pain. Pretty much every trader, from the greenest novice to the seasoned pro, has faced this exact scenario. But the absolutely crucial point here is to reduce your risk, not your discipline, and that is the core philosophy we're going to unpack today. To get us out of that emotional chaos and into a clear headspace, we're going to walk through a really structured, 6-part survival framework. First, when the market goes against you. Second, reducing risk and avoiding revenge trading. Third, asking what changed. Fourth, resting and reviewing. Fifth, finding signals from the difficulty. And finally, protecting your account. Let's get right into it.
Section 1. When the market goes against you. Let's just face the hard truth about those moments when the market completely turns on your positions. This is where the psychological battle truly kicks off. So, here is a massive relief for you. If you're taking hit after hit right now, your core analytical skills, they probably aren't broken. Seriously, it's such a common myth that a losing streak means you suddenly forgot how to trade overnight. What's way more likely is that the underlying market environment itself has shifted right out from under you, but you're still out there stubbornly applying yesterday's strategy to today's market. Moving on to Section 2, reduce risk, don't revenge trade. This outlines our immediate tactical response to the bleeding. Here's a highly specific, golden rule you can implement right away. If you suffer 4 or 5 consecutive losses, boom, immediately slash your trading volume down to just 20 or 30% of your normal size. You don't necessarily have to stop trading entirely, but you reduce your size purely to observe how the market reacts to your entries without taking on that heavy financial exposure. Think of it like paying a tiny tuition fee just to test the waters. I know sizing down is ridiculously hard, but it's absolutely necessary because you have to silence that ego-driven thought that says, oh, this next trade is definitely going to be the one to make it all back. Listen, the market is a highly efficient, totally unemotional machine. It literally does not care how much you just lost. If you let your bruised ego dictate an increase in volume to win it back, you are practically begging for catastrophic failure. That brings us to Section 3, what changed? Instead of internalizing all that failure, we need to flip the script and start looking outward.
This comparison really hits the nail on the head. Amateur traders will sit in front of their screens, wallowing in self-blame, constantly asking, why am I wrong? It's super emotional. Professionals, on the other hand, they step back, take a breath, and objectively ask, okay, what is actually different compared to last week? They externalize the problem, treating it like a giant puzzle to solve rather than a personal failing.
So when you ask what changed, here are the specific variables you should be checking. Did a massive directional trend suddenly flatline into this sideways chop? Did market volatility totally drop off, completely ruining your breakout strategies? Maybe the US dollar index unexpectedly took the wheel, or capital quietly rotated from equities over into bonds. Even observing that the market is suddenly ignoring bullish news, that is a huge clue that the background context is mutated.
This concept right here, this captures the absolute essence of successful trading. Let's say you do the math, read the charts, and you're 100% sure gold absolutely must go up. You buy in, and it plummets. Right at that moment, you have a choice. Accept you're wrong, or try to prove the market is wrong. Spoiler alert, you simply must accept you're wrong. Arguing with the market is basically a guaranteed fast track to draining your capital.
Which leads us perfectly into Section 4, rest and review. When things get completely overwhelming and you just can't find your footing, it's time to trigger this next phase of the protocol. Hitting the pause button and stepping away from your terminal for a day, that is not throwing in the towel. It's a highly calculated, strategic move. Look, when you're buried deep in a losing streak, your objectivity goes right out the window. Taking a pause lets you return with fresh eyes. And a lot of times, you'll realize you were subconsciously forcing the market to fit a personal narrative that simply didn't exist. And while you're paused, you don't just sit around doing nothing, you open up your trading journal. When you look back at your recent trades, systematically go through these steps to pinpoint exactly where things fell apart. Was your fundamental analysis genuinely flawed? Did you jump in a fraction too early? Were your stop losses way too tight for the current volatility? Or were you simply trying to trade trend setups in a market with no trend? Identifying that specific mechanical failure is how you stop the bleeding. Okay, Section 5, signals from difficulty. This is really the intellectual climax of our whole explainer today, extracting actual, actionable data out of extreme difficulty. Just let this sink in for a second. When you can't read the market, that is a signal from the market. Your confusion isn't necessarily proof that you're incompetent. Actually, scratch that, it's highly valuable empirical data. It's the market literally telling you that conditions right now are chaotic, irrational, or just completely unreadable based on your specific edge. That feeling of deep confusion, it's flagging very real structural issues. The mathematical odds are currently against you, the ambient volatility is completely clashing with your trading system, or, quite simply, today is just not the day the market feels like handing out profits. When you realize this, it's a real game changer. Deciding consciously not to trade is, in and of itself, an incredibly effective trading decision. And finally, Section 6, protect your account. This is the ultimate goal, the whole reason we even have this survival framework. You know, we really don't judge a great trader by their massive winning streaks. I mean, anyone can look like a genius in a roaring bull market, right? We judge them by how they objectively manage the inevitable losing streaks. Amateurs panic, crank up the leverage, and trade frantically to win it all back. But the experienced pro does the exact opposite. They trade way less, drastically cut their risk, and patiently sit on their hands until those high probability setups come back. At the end of the day, what you are fiercely protecting during these brutal drawdowns is not your historical win rate, and it sure as heck isn't your pride. You are protecting your financial balance from total ruin, your mental health from burnout, and most crucially, your actual survival in the market. You are making absolutely sure you still have capital left to deploy when conditions finally swing back in your favor tomorrow. So I'm going to leave you with this one provocative thought to ponder. The next time you're glaring at a glowing red screen, feeling that intense urge to double down on a losing position, just ask yourself, are you genuinely trading to generate consistent wealth, or has it devolved into a super dangerous, incredibly expensive game of just trying to prove to the market that your analysis was right? Think about that, apply the framework we went over today, and please protect your capital.